Hey guys, it's Tony. A couple of you asked me how or exactly what a covered call is. How to actually do a covered call, how to sell calls essentially, right? This might be a longer video than usual. So this is probably going to be longer than the minute that TikTok allows me. So if you guys want to see the full video or the full explanation, go to my YouTube and you guys can see it there. So let's get started. Selling a covered call. Like the gist of the easiest way that I can explain selling a covered call is you're giving somebody, if you own 100 shares of something, right? Each option is a contract worth 100 shares. So whether you're buying Spy, Tesla, Rocket, Big C, Snow, GameStop, Nike, whatever, it doesn't matter. Every single option is worth 100 shares by default, right? So in order for you to actually sell a call, you need minimum to have 100 shares of that certain stock in your account. For example, right here, shares. I have 2,770 shares of Rocket, which accumulates my position right now to a little bit under to around $57,000, right? Total, it's actually $63,000 that I have invested in the company. But as of right now, the shares are what's important for selling covered calls. As of right now, the 2,700, you can only sell covered calls in increments of 100 shares. So right now I have 2,770 because 2,770 is divided. You just divide it by 100 and you get 27. So this is what we can do. On Robinhood specifically, you can just say trade options. You go to December 18th, any date that you want to sell an actual covered call for. I'll go a little bit in depth to what this means, but usually when you're on here, it usually says buy a call, buy a put, right? When you have more than 100 shares of a certain stock, you can actually switch it up and go to sell a call or sell a put. We can go into selling puts in a different video, but for now, let's stick to selling calls, right? Selling a call. It's also important to kind of note my average cost. My average cost for this stock is $22.67. I only ever sell calls higher than my average price, because if the strike actually gets if you actually get called on those calls that somebody buys and somebody wants to execute, you don't necessarily take any loss at all. So for example, my initial cost is $22.67. I would only sell calls, for example. So right now I have $24 calls, $24 strike calls for RKT. I actually sold these. I actually sold 27, and I bought them at a much, I actually sold them at a higher price than this. So I would sell 27 calls of this, and I think when I sold them, I think it was like at $16. So I collected that minimum credit of $459 for like around $430 just by selling these calls. And the good thing about selling covered calls is that if somebody actually wants to purchase them, or if by next week, I actually have them for December 18th. So if by December 18th my RKT the calls that I sold are over the strike of $24, somebody can actually tell the broker, be like, hey, the strike is over 24. I want to purchase all of these. I want to purchase all of these calls, and I want to purchase all of the shares that entitle that option. So, obviously, I'm putting my 2,700 shares as collateral. But here's the thing: if my initial buy-in price is $22.67, and I'm agreeing to sell all of my shares for minimum $24, that means that not only did I collect the initial credit of selling these calls, but I'm also selling all of those 2,700 shares for $24, which is higher than the $22.67 that my initial cost is. So I will not only am I getting the credit, but I'm also profiting off the difference in percentage increase from $22.67 to $24. It's a little bit. It's kind of hard to explain when you don't have like a board, where I can actually show the math. But if I bought at $22.67 and I'm selling it at $24, that's an increase of, let's say $2. Let's say my average cost is $22, right? And I sold it at $24, which means that that's an initial jump of a 10% gain on my initial investment. So 10% of $22 is $2. So if RKT went from $2 and I sold it at 24, that means I would make a 10% gain on my initial investment. My initial investment was $63,000, which means that not only would I collect that initial credit, but I would sell those 2,700 shares for higher than what I actually purchased them for. So I would actually be selling those 2,700 shares, and on top of that, I would be collecting an extra 10% gain. And I only really recommend covered calls when you have a low buy-in price on certain stocks, or when you're bullish on a certain stock, right? So I'm constantly going to be the reason that I don't want to sell my RKT position is because it's an easy $500 a week. I can basically do this forever and just keep selling calls over and over and over again. And if something actually hits, I actually get a sign and I sell my 2,700 shares. That means that I'm always going to be profiting. I'll just buy in, I'll start selling more calls, and I'll just keep doing it over and over and over and over again. I mean, there's really no end to this, especially because I do think that RKT long term is gonna be a lot higher than where it is right now, right? But right now it's trading sideways, which is really, really good for selling covered calls. I hope that this kind of explained it a little bit. I'll try to make another video where it's a little bit easier to understand, because I know right now I'm explaining it just from like the top of my head. I know that me understanding things doesn't necessarily mean that you guys understand it in the same way, and probably right now what I'm saying is still really, really new to all of you. So I'll try to make another video where I go into a more in-depth explanation of what exactly is selling calls or doing covered calls. And then for another video, I'll do how to sell puts, what selling puts actually entitles you to. But I hope this helps some of you kind of sort of understand what selling a call is and how to do it. But I will be making another video. I'll probably do it on my desktop, just to kind of show you guys, try to explain it like in an easier way, because I know right now I'm just kind of blabbering on and just trying to do my best to explain it to you guys off the top of my head, right? But yeah, I'll release another video hopefully soon. I am going to be doing more TA on, I think, Snow. I'm doing on Big C. I'll probably be doing a SPY TA, another Amazon, another GameStop, another PLTR, and I'll try to have all of those up this weekend. So look out for those videos on my TA. I do have another video that I was going to release talking about Forex, but that's mostly more niche, to see if you guys are actually interested in learning about Forex, because that's where I usually make the other side of my money. But yeah, I'll keep you guys updated, and I'll release another video trying to explain what covered calls are in a much easier way to understand, I guess. See you later, guys.